What is up, everyone? Welcome back to the trading world. Guys, we did it again. Live on stream. Nice little 1.521 here. Got TPs all the way through here. I'm going to show you guys exactly how I caught that, as well as other trades you could have taken throughout the day. If you guys are new to my channel, my name is Jake. I cover the market daily, covering all kinds of trades you can take from all kinds of different people. I cover specifically how you can trade NQ futures. So, if you like that type of content, definitely consider subscribing, leaving a like, checking out my completely free Discord. The link to that is in my bio, and following me on Twitter. Let's jump right into it. So, here's the trade that I took. And first of all, it was, well, this isn't the trade I took, but it was based off of this, right? Everyone talks about this trade on Twitter. We got DNO, so we got Dino, saying, "What do you see?" And he posts an image of this inversion. This was on the 3-minute, and you can see we sweep out these lows, and then we get a 3-minute inversion here, right? What do you see? Accumulation, manipulation. Well, technically he marks this out on the 2-minute, but this was also a 3-minute inversion, and then distribution, right? Dodgy, very similar situation here, right? He's talking about how his model's the greatest thing ever, blah, 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 blah. We're interested in the trade. So, yeah, this is what as well on the 2-minute, but same deal, right? This is the same type of thing. We get this V-shaped recovery after sweeping the lows. So, here is the trade shown as the way I portrayed it on the 3-minute, right? So we had a giant range. We got a sweep of the range lows into a fair value gap, instant V-shaped recovery, and we got SMT at the lows, and we swept midnight. And this was right at market open. And if you don't know, if you get these moves lower right at market open, there's a high probability for that to be a fake out move, right? The move that happens right after market open is called, a lot of the time, it'll be called a Judas swing, and that just means that it's going to be a fake out move in the opposite direction of the real move that's going to take place. So, a lot of time you can anticipate that, right? So we get this instant V-shaped recovery, but I did not take this right at the close because 3-minute inversion. I did not like this RR. I really did not want this to be a loss and have to deal with it. And I was like, this isn't high enough RR. This isn't good enough, high enough probability for a 1-to-1 right now. Like, I'm not interested in taking it as a 3-minute inversion because my stop loss is literally going to have to be a 1-to-1, right? You can see it like this. It just didn't make sense for my own risk preference, right? But I was like, but if we start to push lower, then I'll consider it. Then I'll consider entering once we push lower into that BPR area. So here I have the same exact trade marked out, right? 3-minute inversion. But instead of taking it on the close, I actually waited until we hit this BPR. And this was overlapped actually with a new day opening gap here. So I have this marked out as a Jan entry. Basically, what that means is anytime you get a retracement after an inverse fair value gap, the model is still valid. You can still take the same trade, but now you have better RR. I call that the Jan entry. So anyway, here's where the normal entry would be. I entered here, and then I just went break even at these equal highs here, and then TP2 and TP3, and the rest was history. This was a nice 1.5-to-1, and you can see right here, here are my executions. I took this live. You can go watch the live stream. Very happy with this trade. Like I said, I didn't like the RR initially, and if you don't think something's high enough probability, guess what? That's why we're traders. We don't have to take something if it doesn't make sense for our own risk preferences. For me, it didn't make sense unless we got a retracement, because I did not like that as 1-to-1 RR. It just didn't seem very high probability for being a 1-to-1. And so I didn't take it. But then once we got a retrace and we kept that liquidity, I was a lot more willing to take that as a trade. So goes to show, don't just take something because other people say, oh, this is a good inversion, everyone's taking it, you got to take it. Like, no, doesn't make sense for your own risk preferences. Conceptualize a trade for yourself. Does it make sense for you? And you have to figure that out for yourself. You can't just go off of what someone else is telling you. You have to trust yourself. And does it make sense for you? All right, next let's talk about the higher time frame. So, on the highest time frame, this is a giant buy model, as you guys probably know by now, right? This is the 4-hour chart here, and this has been going on for a long time. We've been coming down. We swept out old lows into a weekly gap, got a 4-hour changes to delivery. We back tested that quite a few times, and then expansion to the first standard deviation, and now expansion to the second standard deviation. So this is on the higher time frame. And so in my opinion, that is why the markets on the 4-hour has been in this consolidation, because on the highest time frame, we have been expanding. We have been expanding all the way up for so long that the model is complete temporarily, right? So now the market is kind of just chilling in this 4-hour accumulation. So because of this, any trades we get are going to basically be trades back towards the center of this range here, because we're basically in this consolidation. So what you kind of have to do is you have to frame a model to go back to the center. And so this is kind of what I did, actually. This is exactly what I did. I framed a model. I thought this was a really, really actually clean day because it was a daily profile. It was London low of day, New York continuation. So London reversal, New York continuation. That's the technical name. Where London pushes into a key level, and then New York continues the opposite way. So open, low, and then expansion. So you can see that's exactly what happens here, where we get Asia accumulates. And you guys, once you see this happen over and over again in price action, it's just going to become second nature to you, right? You're going to see these daily profiles and be like, oh yeah, London is going to form the low of the day here. So London formed the low. You could just go into the market and see, oh yeah, London swept out Asia's lows. We got SMT at the bottom. New York's probably going to expand. Like, this is going to become second nature to you. It might not seem like it right now, but as you just review the market over and over again, you'll be like, oh, London formed low of the day, New York's going to continue up. Remember that. If London forms low of the day, New York is probably going to continue in that same direction. This is probably the most common daily profile. Probably the most common. But anyway, this was a giant market maker buy model, right? And so this is how I framed this as a buy model. We had accumulation here. You can see this happened. This was Asia, right? Asia accumulates. We get S&T with this low. And we have a really nice 1-hour rejection block. And so I'll pull that up so you guys can see exactly what I'm talking about. But on the 1 hour, if I zoom in here, on the 1 hour, we have this really nice wick right off of the opening of the market for the new week. You see this? This is a nice, very nice wick to use as a rejection block. And the cool thing about this is we get SMT at the rejection block. So let me scroll down. Okay, so look at this. S&P makes a lower low into, and it sweeps out the low of its rejection block actually. And NASDAQ forms a higher low within its rejection block. So once again, S&P lower low, NASDAQ higher low. So that is our confirmation that this is very likely low of the day. So then zoom in, right? Now, off of this, we have SMT. So there's your SMT. Remember we just talked about that, where S&P makes a lower low, NASDAQ makes a higher low. So that's confirmation that this London low was actually low of the day. So now we're looking for a sweep. You can see we have that right here. So accumulation, manipulation. And then if I go back to this image here, accumulation, manipulation of that low with SMT, and then right there at that high, right? When we close, I would actually call it, I would mark the change of state of delivery out like this, because this is the top of the order block. So I would mark it out like this. So we sweep out the low, 5-minute change of state of delivery. And guys, look at how perfect this is. Look at how perfect we come back and retest this change of state of delivery here. So once again, accumulation, manipulation. We have another little accumulation here. And then inducement of the lows into the change of state of delivery. And essentially, I'm sure someone caught this as a 4-hour trade. Actually, I know someone did. I have it on Twitter. You can see this was the change of state of delivery. And we go right to the 4th standard deviation, which was aligned with PM's highs. So once again, here's this image. We have SMT, 5-minute change state of delivery. We tap that, and then we expand up to that 4th standard deviation, which was PM's highs. And I also note how you can take this as a 5-minute IPG here. Now, this is not the 5-minute time frame. I think this is like the 1 minute, but you can see this was a 5-minute inversion. And so I actually marked this out in real time. I was considering taking it, but I wasn't going to take it because I already took my trade for the day. But if I was taking the trade, I was considering taking this because it was in line with my higher time frame model I made. But a lot of people took that that kind of trade in general. I think I actually know someone on Twitter actually did take this. I'm gonna pull their tweet up real quick. It's a sign of the time. It's gonna take too long to pull it up, but they basically caught that exact trade, so that's pretty cool. And then yeah, it's kind of cool because this was just such a textbook daily profile, right? We form the low of the day and then we expand up to PM's highs. And so as far as trades on Twitter go, I covered most of what I saw, which was just the tweets from Dino and Dodgy. There wasn't a ton of other trades people took today. So I'm just going to talk about other things I noticed about the market, right? One thing I noticed was if you take the range projections of Asia, right? You can see 1 standard deviation down perfectly marks the low of London, and 4 standard deviations up perfectly marks the high of PM. I thought that was fascinating. So if you ever want to just project out range projections, this is just as useful as standard deviation sometimes, right? Then after that, I'm gonna show you guys clips from the live stream because I found this to be interesting. That's not it. Yeah, this was it. So, at this exact moment, right, we had this 5-minute gap. We were forming that SMT below midnight. As you guys know, and probably have known from my videos, if you don't know yet, anytime we form SMT and we go below midnight, that is such a high confluence for the low of the day, right? So if I go into the charts, you can see that we form SMT with this low here. So SMT with this low. Check that out, SMT. And then we go below midnight, right? So here's midnight, right? SMT sweeping out these lows below midnight. And then we start to aggressively move higher. And at this point, a light bulb needs to go off in your brain. We got SMT, we swept out all the lows, we went below midnight. The low is probably in. When you see that happen, the low is probably in and you're good to enter. So, a trade that I liked, that I marked out in hindsight, and I caught it about 30 seconds too late on the live stream. I'm going to show you guys on the live stream when I talk about it. Was this. When this will load, I'll show you. We had that 5-minute fair value gap. We had SMT. We have midnight here. We sweep out the lows over here into this 5-minute gap, and we get a 30-second change state delivery. And I say this, I'm going to show you guys when I say this on the live stream. When we get this 30-second change state delivery, I'm like, wait, I really like that 30-second change state delivery because this is all going to be acting like a liquidity void, right? There's essentially no orders were traded within here. Hardly any orders. There was some, but once again, the majority is going to be up here. So this is where the market's going to aggressively draw back to. So when we get this 30-second change state delivery, light bulb goes off in my head. Now, I don't catch it fast enough, but I'm going to show you guys a clip of me talking about it right here. Once again, below midnight. That's this dotted line with SMT. Below midnight with SMT. I liked this 30-second change of state right here off of this 5-minute gap. See how we get SMT below midnight? Guys, I'm not saying that I just should have taken that trade because it was too late, but I should have been on my feet to be prepared for that 30-second change of state delivery because once again, if I could have got that 30-second change state delivery trade, you can see this would have gone to 4R, right? This would have been a sniper entry, and I really, really liked it. It just happened too fast for me, and so, I mean, it's really hard to go wrong when you have a SMT sweeping out lows and we go below midnight. It's the market. You got the market on your side. If you sweep out lows with SMT, go below midnight into a fair value gap and get in the line time frame, change the state of delivery, you got the market on your side. And so anyway, then the rest was history. We expanded higher. So from here, yeah, that was one of the main other trades I noticed. But yeah, super clean model today, and the drawn liquidity ended up being PM's highs, at which point that completed the model. And yeah, I think that about covers it for today. Yeah. Nothing else really worth talking about, in my opinion. I did try and look on Twitter, guys. I tried to look on Twitter for other trades. I really didn't see other people talking about much, so that's going to be it for this market recap. But once again, I really am trying to cover other people's trades on Twitter. I just did not see much today. So with that, I hope you guys enjoyed this video. Hope you enjoyed this market recap. I hope these are helpful. for at least one person. And if they're helpful to one person, then that makes all the difference for me to keep making them. So, yeah, anyway, hope you guys enjoyed. I will see you guys next time. Peace out.